to actually read your credit report in full in its entirety and understand exactly what each line item stands for and what does everything mean. Don't worry, you're here for the right video. We're going to go ahead and break down to you guys how to read your credit report properly. Okay, so I'm going to go ahead and share my screen here. And you guys, that way you guys can actually see what this is going to look like. Okay. Now, if you guys are curious about how this is going to look for you, this is Identity IQ. Okay. So Identity IQ has been out for quite some time. This is their new platform called Score IQ. I really like it because it shows you all of your industry scores, and which I'll show you guys here in a hot second what that actually means for you. Okay. Let me just make sure I zoom in enough. If you guys got any questions about this, you guys just let me know inside the chat as we move along. Okay. So first things first. Soon as you go to your, soon as you open up the credit report on any credit report, now it doesn't have to necessarily be Identity IQ, but for this example, we're using it. Now it's going to be your personal information. So you're going to have the date of the credit report. This is going to be your first and last name. It's also going to be your date of birth. Now this is a demo account, so I'm showing you guys an example here because there's a couple of errors in here on purpose, so you guys can actually see why some credit reports do actually look like this. For example, you can see where the date of birth, it says 1967 on Experian, and then you have Equifax with a different date. Okay. This you most definitely want to go ahead and update the personal information, when you can. Okay. So, and then to do that, you can either dispute it directly, or you can go ahead and just send the information correction. Okay. When you are updating your personal information, it's not necessary. It doesn't necessarily have to be a dispute. You can actually just call. You can either call the credit bureau, but they're more than likely going to ask for some type of documentation. So it doesn't have to be a dispute. But if you want it to be, it most definitely can do a dispute of personal information. Okay, like whether it's your date of birth, your current address, any previous addresses. Now, one of the questions I always get is, do you want to dispute previous addresses? Um, Here's the thing. I strongly recommend leaving your previous addresses on your credit report. And the reason being is because everything's now transitioning to what we call a soft pull. Okay. And that soft pull is essentially going to use the information that's already on your credit report. So, for example, if you start removing your previous addresses, then it's going to be a lot more difficult for that soft pull to actually go through. Okay. And then it's going to show your employers. Okay. As you guys can see, it does not show your income. Income is not going to be on your credit report, although some of these credit bureaus do have access to, and as we talked about in one of our other videos, Equifax can get access to your income. But again, it's not going to have any factor or show up on your credit report in any way, shape, or form. Okay. And then, of course, it's going to be your scores. Again, we put some different scores up here just so you guys can get, because everybody's score is a little bit different. We don't want anyone to feel left out. So whether you're a 491 or an 848, you'll most definitely be, your score is going to show up in the score area. Now, what a lot of people don't talk about is your industry scores. Okay. So your industry scores are going to be based on the industry that you're actually looking at. Okay. Now, what is an industry score? Industry score is essentially when you are, let's say, looking to get an auto loan. That means that when you go to the dealership, they're going to pull your auto loan score. When you apply for a credit card, they're going to pull your credit card score. When you are essentially applying for an apartment, there is no apartment score, but they're going to be looking at your overall score. So there's a lot of different scores that you have, and those are going to be your FICO scores right there. Okay. So if you're trying to get a mortgage, that's going to be your score 2, as it says FICO score 2. And then, of course, your auto scores, your bank card scores for credit cards, so on and so forth. Okay. And then now, if you have, I think that it's what they call a consumer statement. Back in the day, people used to put on there, "Hey, I was a victim of identity theft," or something like that, or "I have a fraud alert." This is where it would normally show up. You do not have to have a consumer statement. Consumer statements do nothing to your credit reports. Back in the day, it used to explain certain things, but no one cares about it. To be totally honest with you, no one even reads that section. Okay. Then it's going to be your summary. Your summary is going to be your amount of accounts, open accounts, closed accounts, what your balances are, what your payments are, and of course, what your increase are as well. Okay. Next is going to be your account history. Now, we're not going to go through each account. I'm just going to go through each section so you guys have an idea of what it's going to look like. Okay. So in this case, this is going to be, let's say, for example, it's a furniture company. So this, in this particular case, is Badcock Furniture Company. So things that you're going to be looking for in your credit report is going to be, number one, is going to be your account number. Okay. So everything should have an account number, account type, an account type in detail, the bureau code, the account status, the monthly payment, the date open, the balance, number of months, meaning the term that you signed for or have, the high credit, with the credit limit, past due, payment status, the last reported date, any comments, the date that it was last active, and the date of last payment, and of course, your payment history. So let's go ahead and break this down so you guys can see this and understand it. So this is where your account number is going to be. So if you're going to be disputing, if you're going to dispute an item from your credit report, you always want to put the account number. If there is no account number, then you can use the account open date. Okay, the account open date would suffice instead of having the account number. Then you have the account type, which is revolving. There's only two types of accounts that are on your credit report. One is installment and the second is revolving. Okay. Installment means that you borrowed money and you're going to pay it back over a certain period of time from set monthly payments, installments, also known as notes. Okay. Card note, house note, student loan payments, things of that sort. Those are going to be installment accounts. Another way to remember installment is usually they're going to end in the word loan, mortgage loan, student loan, auto loan, personal loan. Those are going to be installment accounts. Everything else is going to be revolving accounts. Okay. That means that the amount of money that you owe could potentially change because it revolves. You can swipe up, you can swipe down, which means you can add up. If you swipe more on the credit card or something like that, in this case, it's a furniture card, which means that yes, the balance in here is $450, but the limit is $1,154. Now, some credit cards will not have a set limit. Like this furniture card was like, hey, it gave them a certain amount. So it's not uncommon that you may not see a credit limit on retail credit cards because retail credit cards are usually one-offs unless you're always going in and out. Like if you have like a Macy's card, Victoria's Secret, Target, those are going to be changing all the time because you may be shopping like that every now and then. But furniture, I don't know how often you guys are buying furniture, okay? But but either way, that's how that's going to be showing up. And then the bureau code, this is going to let them know if it's an individual account, which means that it's 100% in your name. And then you have a joint account, which means that it's there's two people that are equally sharing the weight of that account, or if you are a co-applicant. Okay, so there's a couple different ways that you'll see this a joint application or a joint account essentially means that both you guys have equal ownership and it's joint. And then you have a co-signer, which means that you're either second or first on that particular account. Okay, that plays a role because if you co-sign for someone that has a car, the bank is going to be able to see that, hey, you co-sign for someone, you're financially responsible, it's on your credit report, but you are not number one on that loan. It depends on what you are applying for. Some banks may see that as a flag, not a flag, but they'll count that against you because they say, hey, we have to hope that you can pay this car note as well as the one that you co-sign for as you're legally and financially responsible for that one. Okay, so just keep those things in mind as the bank looks at that. And then your monthly payment. The account status, whether it's open or closed, or some of you guys have also seen where an account status may show terminated. Okay. Terminated means that you were a authorized user. That's actually another bureau code that will show up as well. Authorized user, which of course means that that it's a trade line. Essentially, you're an authorized user on that credit card account. And then that's when it's open. But when it's not open, if you are an authorized user on a credit card account and then you've been removed from that account, then that means it's going to show terminated. Okay. If the account was closed and you were still on that account before it closed and then it closes, it's going to show closed and it'll show still authorized user. But if you've been removed and they can't see whether the account is closed or not, then it's going to just simply show terminated here. That's why you guys see terminated sometimes. Okay. And then of course, account status is going to be open or closed or charged off or something like that, included in bankruptcy. This usually when you kind of get to the status, which we'll get to in a second. Then the monthly payment. If there is a set monthly payment that reports to the credit bureaus, you'll see this here. If there's an account open date, of course, you'll see that there. The current balance. Let's talk about that for a second. So these numbers may actually change your monthly payment and your balance because credit reports are 30 days behind. They don't know that you're going to pay something. They don't know what the balance is assumed to be. So it's you pay something, the balance then reports to the credit bureaus, and then so it's not going to be updated until 30 days later. So That's why sometimes people say, oh, well, this isn't my balance. Well, yeah, because it doesn't know the balance yet because it hasn't been reported yet. Okay. So credit is normal, it's natural for credit reports to be anywhere between 1 to 30 days behind. Usually you won't see nothing more than about 40 days late. I'm sorry, 40-day a delay, in reporting, but on average, it's going to be about 30 days or so. Okay. If there is a set amount of terms, usually you'll see this when you have a car note, whether it's like 48 months, whatever the month a term is, 72 months, 75 months, whatever, you'll see that there. High credit. High credit is different from credit limit. High credit means this is the most that the card has swiped up to. That doesn't mean that that's the highest that the card can go. The highest that a card can go will be the credit limit, okay? But the highest that a card can that has been swiped will be a high credit, okay? So for example, because credit limits sometimes change. We'll talk about that next week. But when let's say for example you have a credit card, the limit is 1,000, but then you swiped 1,100, right? So you'll see in that, so that high credit will show 1,100 because that's the most you've ever swiped up to in a month, even though your limit was 1,000. Okay. Now, what is not on credit reports, which I think should be on credit reports, is utilization percentages. That way you can have it. That way people can know that, hey, this is actually hurting your credit report more than it's actually helping you. Okay. So just keep that in mind. If you are past due, it will show how many days you're past due, and it goes in 30-day increments. So 30, 60, 90, 120, so on and so forth. By the way, did you guys know that a charge off would not show up on your credit report as a charge off until after 6 months? So unless you call the bank and tell them, hey, I'm not going to pay you, they still cannot make it a charge off until it's actually 6 consecutive months late. Not just where you're late and you late and you pay. It has to be 6 consecutive months not paying at all. So there's a difference between paying late, which means there's going to be a late fee, and then of course you have not paying at all. That's called a missed payment. Okay. And that's going to show up in the past due section. Next is going to be the payment status. This is if your paid account as greed, or to say just past due, or to say whatever that account status is, bankruptcy or settlement or something like that, which also could show up in the comment section. That's another reason why I like Identity IQ, because a different credit reports different creditors report it a little bit differently to each credit bureau. That's why sometimes you guys will see certain things and you won't. But with Identity IQ, they have every single computer code that the bureaus have had since the 90s. So that way, even if it's a company that still does things a little bit of old school way, which is another reason why they're kind of changing some of this stuff, is simply because the information that's there is not being reported as it should be. And so you just want to make sure that everything is showing up as accurate. So the date that this was last reported was July the 1st, 2023. And then, of course, if there's any comments, the date that it was last active and the date of last payment. Okay. And then, of course, if you want to understand the legend, this shows you right here, what that's going to end up being. So as you can see here, 30 days late, that's, pretty, common to understand. But then you have the CO. A lot of times you'll see CO if there is an account that's been charged off with an open balance. What does that mean? So that means you had a credit card or you had an account, you didn't make any payments on it, and then after 6 consecutive months, it now shows up as a charge off. It's going to show CO every single month until that balance is paid or until the account closes. Companies are not, by law, they don't have to send it to a collection company. So if they do send it to a collection company, then it's not going to keep showing. But that's because now that balance has been zeroed out, and now the collection company has now paid. They have essentially paid that company, and now it's going to be a brand new collection. But the other way around that is, if they don't do that, then what's going to end up happening is it's just going to show up as a charge off, and it's going to keep showing CO. That's why I was telling you guys, I know everyone's talking about, disputing your charge offs, but if that didn't work for you, if that didn't come off of your credit report, it's okay to make a payment arrangement to get that taken care of. And then, of course, you have your voluntary surrender. This doesn't necessarily mean much, as well as the payment plan as well, too, or settlement, things of that sort. That, again, it's just a status, okay? But it doesn't necessarily hurt your score in any way, shape, or form, because, again, the fact that it's already been done, that is what's going to actually affect your score. Okay. So give me 1 second. Let me actually log back in here. And does anyone have any questions as we're going through this as well? Okay. Any questions so far? Don't worry, guys. This won't take a long time. But yeah, any questions on this so far, guys? Everyone all good? Okay, perfect. All right. So now I'm pulling this back up here. And the next thing we're going to go ahead and do is I'm going to show you guys how the inquiry actually shows up, which I'm sure you guys have seen inquiries before. Or if you guys also, if you haven't seen how the inquiry shows up, I'm going to see if there's a collection that shows up on here as well too. But the collection is going to show up pretty much about the same kind of way. But I just want to make sure you guys can actually put eyes on it, and then that you can see that there is okay. All right, so I got it back up here. So let me go ahead and pull this back up, and you guys should be able to see that right now. Okay, perfect. All right, so now we're going to go ahead and go back into the credit report here. Okay, and then we're going to scroll down so we can actually see. All right, and it is loading up here. And it's different accounts, guys. I don't want to go through, but I will show you guys this one just so you guys can see a different example here. So this one is a voluntary repossession. Okay. So again, a voluntary repossession does the actual comment itself does not hurt the credit score. Okay. So if it says settlement, if it says paid in full, whatever it is, it doesn't matter. Again, if you give a car away, it doesn't affect your credit any less if they have to come and get it. Does that make sense? A repossession is going to affect your credit report, whether they come and get the car or whether you call them and say, hey, I can't pay anymore, and they come and pick up the car. A repo is a repo is a repo, okay? And it will affect your score as such, okay? All right, and then I'm going to look up some other examples here as well. A paid count to zero. So you guys can just see just different types of here's a charge off as well too. So different types of accounts in general. Again, this is what a charge off will look like. Payment status charge off account. Okay, so that's how that will look. And again, dispute that. See how see right here where this company is no longer reporting the account number to Equifax. So how do you dispute that? You can do a couple different ways. You could print out the credit report and then just print out this page. You can save it as a PDF and then print that page out by itself. Or you could just go ahead and then just put the date open instead of just having the account, number as well too. So just keep that in mind as you guys are doing those things. Okay. And then what I'm going to do now, some of you guys are probably wondering when you have a collection, why does it show up twice? So it's not really showing up twice. It's showing the original creditor from the original account, and then the collection is technically a new account. Okay, that a collection company is now a new account that's now showing up, so it has to show on there by law if they are now the collection company, so it can have the right information. Now, what you're also going to understand is collection companies, they update their information. They don't update their information like they always do. So let's say, for example, if a collection company has a profile with TransUnion, Equifax, or Experian, doesn't matter, but then their phone number may be inaccurate. Their address may be inaccurate. They may have the head office on there. The phone number may be inaccurate. So you can't always rely on the contact information for the collection company if you do plan on paying any of your collections. Okay. So I'm going to show you guys another example here. I'm trying to get down to the increase so you guys can see. Okay. So just let me just make sure. Okay, perfect. So you guys saw all of those examples. All right. So then let's go into increase. Okay. So with increase, you're going to be able to see the name of the company, the type of business. By law, they must say what type of business they are, the date of the inquiry, and the credit bureau that they were on as well. Okay. Then you also have your public information. Now, this is if you have any bankruptcies. This used to include civil judgments, but up until the last, I think, about 8 to 9 years, they then took away civil judgment. So only public records will show up in here, which of course will be bankruptcies as well. Now, court records no longer show up on here. Tax liens no longer show up on here. Other judgments no longer show up on here, but they used to back in the day. Okay. And then, of course, your creditor contacts. Now, again, this is another reason why I like Identity IQ, because they break everything down. So every account that you've ever had open, they're going to be able to show you that phone number, the telephone number, the current address, as well as the creditor name. But keep in mind, this is only based on the profile that they have with that particular credit bureau. So there is a chance that it may be outdated. Okay. So just always take that with a grain of salt. Okay. I do see that we do have a question here. And so JC says, I give up on my credit so many times after trying and so much everything asked, even hiring a credit repair company. Listen, JC, I'm glad JC actually brought this up, guys, because listen, you don't want to give up on your credit, guys. You don't want to give up on your credit. Let me tell you something. You just have to work with the right people. See, a lot of times most of you guys don't need credit repair. you guys need a game plan. Okay. And see, the thing is that you need someone that's going to take a look at your credit report and to tell you exactly what you're going to need to improve your credit score. See, credit repair, I want you guys to understand something. Credit repair is to try to get negative items removed. That's all credit repair is. That's it. It's disputing items. That is what credit repair is. Okay. But what you all are looking for is really credit improvement. You want to get a higher score. Okay. So now don't get me wrong. Can you get negative items removed? Some things come off, some things don't. Yes. But at the same time, you really want someone that's going to show you how to improve your credit score. So, JC, listen, man, I'm telling you, do not give up on this. You most definitely can do it. And, JC, let me tell you something, man. If you would like for me to take a look at your credit report, go ahead and scan this QR code right here at the top. All you got to do is scan that QR code and then, of course, get everything finalized. Send the team over the login credentials, and we'll get you a game plan over to you in less than 48 business hours. Okay. Of course, we got some holidays coming up, so you most definitely want to go ahead and get that taken care of. But before you make your final decision, JC, I want you to understand something: is that it's not too late. Okay. The thing is just most credit repair companies, all they're going to do is keep sending stuff out. That's all they know how to do, but they don't know what to tell you to do. They don't know what accounts that you need to add. And guys, you guys got to understand that is that that's what you're looking for. If you're looking to improve your credit score, you need someone to look at your credit report and say, "Hey, listen, this is exactly what you need to do," because you may be doing something, but you're not doing it all the way. You may be doing the wrong thing. You may be applying for the wrong accounts, right? You may be maxing. There's so many different things that you're doing. You may be maxing out the accounts that you currently have. You may have too many accounts. And so you just don't have the right knowledge, the right information to actually get started and doing things on that. Okay. But again, do not give up on yourself. You can most definitely improve your credit score. It does take some discipline to maintain your credit, but you most definitely want to go ahead and start putting yourself in a good position as you continue on. Okay. Does anyone have any questions in general? Let's see here. So Risa says, and by the way, guys, I'll be wrapping up here shortly. I'm confused on voluntary and involuntary repo. Can you explain it again? Because I did a voluntary repo. Sure. So an involuntary repossession is when you essentially, when the bank comes and takes the car, whether they tell you or not, they're essentially saying, "Hey, we know that you're late. We're coming to take the car." Okay, that's involuntary. Voluntary is when you call them and say, "Hey, I cannot, I can no longer make the payments." Now, just so we're clear, voluntary or involuntary is still a repossession. That just simply means that it's still going to hit your credit report hard, okay? Which means they're going to come pick up the car. They're going to sell it at an auction. And then the difference between what they get at the auction versus what you owe them, that's going to be the balance that's due back to the balance that's still due to them. A lot of times people forget that just because they pick up the car and sell it to the auction, that they're done. No, you're not done at all. A lot of times you're going to be upside down because most people usually get repossessions within about 50% or less of the term, which means that if you sign a 6-year car loan, usually, I'm sorry, 6-year term, that's usually you have you have about 4 years left on the car loan, 3 years left on the car loan. Okay. And I hate to see when people get their car taken away and they only had a year left or 2 years left. So again, whether you call them or not, you're still more than likely going to be upside down. And let me give you guys an example. Let's say, for example, you owe $10,000 on the car. They pick up the car, they sell it to an auction. They only get $6,000 at the auction, but you owe 10,000. So 6 minus 10 is 4,000. You now owe them $4,000, but now you're paying a bank for money that you borrowed, regardless of equity, and now you don't have the car. Okay, so it doesn't matter whether that situation is there. And then now, can you build around that? You most definitely can. Okay, have people been taken to court? They most definitely have been. Have people been sued? Have people had their wages garnished? They most definitely have. But there's also the other side of the coin, right? Where some banks don't do nothing at all. About 70% of banks do nothing at all because banks, just like you guys take a loss on your taxes, they do losses on their taxes as well. Some people get caught up in it and then some people don't. Okay. So Risa says, so, okay, so whatever they sell a car for, I would know. You won't know, technically, you won't know exactly what they sell the car for. You'll just be able to kind of do the math. So, for example, if you owe 10,000 and then let's say they take the car and a couple months go by and then you see that you owe 4,000, it's safe to say that they sold the car for around 5,000 to 6,000 plus some fees and things of that sort. But technically, technically you won't be able to actually see what that was. You'll just be able to see what the balance was left over, unfortunately. Okay. Now, could you do the same thing? Unfortunately, you won't be able to because you don't have the title. Okay. But it's always best to try to work out a payment arrangement with them if you guys can, or just build around it, guys. Okay. I always tell people, hey, listen, and again, this is not financial advice. This is just credit advice in general. But I always tell people to say, listen, if you can't pay it, you can't pay it. And then just work on your credit and build around that negative item. If they're going to take you to court, they're going to take you to court. But again, 70% of banks don't take people to court. And if you're really lucky, 15% of banks will actually send you something around tax season. And I forgot what it's called. I think it's a 10, I think it's a 1098. And a 1098 is essentially where you have to add that income to your actual taxes. So let's say, for example, same example, a $10,000 car. They take the car, they sell it to the auction for 6,000. You owe 4,000. Okay. They then send you a 1098. I think it's called a T 1098. Okay. For the tax people, go ahead and correct me, whatever that document is. But either way, that's essentially when they go ahead and write off the debt. But when they write off the debt, that's essentially saying that you don't owe them. Okay. They've written it off. Okay. That's different than a charge off. A charge off means, hey, we've taken a loss, but you still owe us. A write-off means that they've taken a loss and you no longer owe them, but you have to add whatever you were supposed to pay them to your income for the year. Okay. So, because essentially that loss was money that they lost, and they want you to add that way, because they're taking it as an expense, and you have to now add it as an income. Okay. So that's a little bit different. Okay. Hopefully that wasn't too much craziness for you guys on that one as well. Okay. So, but again, if you all want someone as a professional to take a look at your credit report, I'm more than happy to do so. I hope you guys got some information here and it was helpful as well too. But I'll catch you guys on the next video as well. We got some really great stuff coming up. So stay tuned.